You are on the Transparent FX Academy. I'm Nick, and I'm a top potter on TradingView with over 250,000 reputation points. And what I love the most is sharing educational breakdowns that show you how you can be looking for the best trading opportunities in the market. So without further ado, let's go and see which is today's Forex pair that we need to break down. In today's video, I want to speak about silver. Now, why do I want to speak about silver? Because we have very interesting price action for a potential opportunity on it. And as usual, I want to keep this analysis as educational as possible. So first, we will be covering the technical aspect of this market. Then we will go and see what we have from an order flow perspective by checking the commitment of traders, which is basically what hedge funds. So the non-commercials in the market, which are the biggest speculators and institutions that are speculating in the market, are doing. And by the end of the video, by using the combination of our technical analysis and our order flow analysis, we will be able to understand where we have the highest probabilities for a potential trading opportunity on silver. Now, starting here from the monthly time frame, what do we have? Now here in the monthly, what we can see is that the market has just created this W formation here. Now, generally speaking, after the creation of a W, what you expect is for the market to provide a move to the downside to complete the pattern at the neckline. Now, in general, the neckline is the previous resistance turn support. So here in the monthly time frame, what we expect is and what we expected was for the market to complete the W formation at the neckline. So this previous resistance turn support before then starting the continuation to the upside. So here in the monthly, everything is quite clear and is happening exactly as we usually expect. First completion of the W and then continuation to the upside. Now in general, after an impulse in the market, if you want to measure the correction, you have to take your Fibonacci from the low to the high of the impulse. And if we do that, we can see that the market has just retraced to the zone, which is exactly in between the 0.618 and 0.786 of the Fibonacci taken on this monthly impulse. So basically this zone here, which is a very strong confluence of support, since we have, first of all, the Fibonacci's as we have already identified, but also the previous structure resistance now turns support, creating a confluence of support that we did expect the market to test before our rejection to the upside. So at the moment here in the monthly, everything seems quite bullish and we can expect the market to provide more continuation to the upside. Going down on the weekly time frame, what do we have? Now here on the weekly, price action is quite clear as well. We have a market which has just printed this candle here. Now we still have 1 day and 12 hours to go before this weekly candle here will close. But if this weekly candle will actually close with this shape, so a very long wick and a green body, at that point what we can expect is for the next candle to fill in this wick. That is what happens most of the times when you see a candle like this, because if on the weekly you have a very long wick and a green body, it means that actually on lower time frames, aka the daily time frame, you will have an impulse and a correction in which the correction is exactly the wick that we see here on the weekly time frame. And in general, in the market, after an impulse and a correction, you expect the market to provide the continuation to the upside. So here on the weekly, important to see how this weekly candle will close in 1 day and 12 hours. However, at the moment, everything seems quite bullish. So at the moment, monthly and weekly, both are showing quite strong bullish price action on silver. Just a quick thing, for more educational breakdowns, make sure you subscribe to the channel and hit the bell. Going down on the daily time frame, what do we see? Now here on the daily, we can see that at the moment we're testing strong daily support. In fact, this zone was acting as very strong previous daily resistance preceding this move to the downside. And at the moment we are testing this previous resistance, which after this break to the upside was turned support, because as you know, in the market, previous resistance, once it is broken to the upside, is turned support. And as the market is testing this previous resistance turn support, we can expect the market to provide a rejection to the upside, possibly for the creation of a higher high and completion of this impulse correction and impulse pattern to the upside. Now, generally speaking, after an impulse, if you want to measure the correction, you have to take your Fibonacci from the low to the high of the impulse. And if we do that, if we take our Fibonacci from the low to the high of this impulse, we can identify that at the moment we're testing an extremely strong confluence of support. In fact, we can see how the market is currently testing the confluence of the 0.618 of the Fibonacci taken on this daily impulse with this previous resistance turned support. And as the market is testing this confluence of support, we can expect the market to provide a rejection to the upside, possibly for the creation of a higher high and completion of this impulse correction and impulse pattern to the upside. So at the moment, clearly monthly, weekly, and daily all seem quite bullish for silver. Now, if we go and see what we have from a COT perspective, so commitment of traders, which is what hedge funds are currently doing in the market, we can see that lately on silver net positions have been increasing. In fact, we went from having 28.9k net positions all the way up to having 52.8k net positions, with 7.5k longs added, with the last report reaching 86k long positions and 33k shorts. So silver is getting quite bullish also from an institutional perspective, with longs getting increased and shorts getting decreased. So monthly, weekly, daily, and the COT data all seem quite bullish, meaning that the highest probabilities are actually to the bullish side and not to the bearish side. However, as usual, trading is reactive. Trading is not predictive. So with students, how we will be approaching this specific situation. As usual, monthly, weekly, and daily combined with the COT data, those are the best timeframes from a directional perspective. But when it comes to confirmations and entries, the best timeframes are the 4-hour and the other intraday timeframes. So inside of this area, what we will be doing with students is monitoring price action from a 4-hour perspective and lower weighting for the market to shift from an intraday bearish market as we have right now to an intraday bullish market. If everything will remain bearish as it is like this and right now on silver, this market will easily continue to the downside. However, if the market will shift from an intraday bearish market as we have right now to an intraday bullish market, at that point, we will be adding silver to our watch list with students. And as soon as the market will provide to us one of our valid entries, we will be taking a nice long with a good risk to reward and good probabilities at that point for the move to the upside and for the market to complete this impulse correction and impulse pattern to the upside and creation of a higher high. If you enjoyed the video, make sure you smash that like button and comment below. Also, you can go and check out the mentorship program. The link is in the description. It's a very complete program. First, you learn all the rules of my rule-based strategies. Then you trade the strategies with me. In fact, every day you get a new daily market breakdown showing you how to apply the strategies with the entries, stops, and take profits. And you also get a daily Q&A session in which I answer all your questions. So it's a very complete program. I really suggest that you go and check it out. And I will see you in my next breakdown.